Well, hello, traders and investors. My name is Roger Scott. I'm the head trader for WealthPress. Today is Friday, October 2nd. It's the first Friday of October. We got to get into the market. We'll start right now with the most important thing. President Trump, he's got the COVID, and so does Melania. Now, I hope they're not on the way to Kremlin to get one of those vaccines that Putin gave his daughter. I just hope that's not the case. And I don't think he's going to do that, but I got to make some light out of this situation. The market's down quite a bit. Why? Because there's a lot of uncertainty. We don't know if the president's going to be okay or not. And we've got the elections in less than a month. I mean, this is interesting. And we've got economic data. We've got employment situation coming out in just a few minutes, and we'll do that live. Actually, I wanted to time this report. The consensus is 8.2% unemployment, all right? I want to see what kind of numbers come out. Consensus 894,000. All right. Okay. Recovering labor market slowed in August, especially when excluding temporary consensus jobs. A rise of 894,000 is the expectation for September. We'll see what happens. Again, we'll see what happens. I want to see the unemployment rate drop below 7%. That would be really, really important. Let's see if we get that right now. Let's see if the report is out already. Let's see. It's updating. It's updating. Oh, yeah. Look at that. The actual number is 661,000. It's dropping. But what's the employment situation? I don't know if that's out yet. Let's see here. That's interesting. It's moving. It's moving. Let's look at the actual. Looks like they're posting it right now. Hasn't been posted yet. We'll check again in a few minutes. But let's look at what's happening with the world. U.S. stock futures. I could barely speak. It's Friday. U.S. stock futures and world markets fell Friday after our president said he and First Lady Melania positive for COVID-19. Futures, S&P 500 is down about 300 points right now. It'll be interesting to see what they're down now because the unemployment data just came out. He tweeted the results just hours after the White House announced senior aide Hope Hicks had come down with the virus. Positive test readings from the leader of the world's economy heaps uncertainty, that's what I just said, onto a growing pile of unknown as investors grappling with all of the stuff going on now, including the November 3rd election. And so in trade war, election, now we have COVID-19, the tax returns. I mean, I got to say, Trump brings drama with him. A statement issued by Trump's doctor saying both he and his wife were well and that he would continue his duties appeared to have calmed the market's reaction. I'm not so sure about that. The markets are down pretty good right now. Reports that the Japanese government is preparing new stimulus measure to help the economy recover from the prolonged downturn worsened by the COVID pandemic only proved to be a temporary lift. Prices fell further after Trump's announcement. And again, the COVID-19, the fact that we don't have a vaccine and the vaccine is going to be pushed back to the first quarter of next year, and the fact that we don't have a stimulus and so much unforeseeability. Big swings in the markets have become routine as investors assess chance of a deal on Capitol Hill to send more cash to Americans, restore jobless benefits, and so forth and so forth. Beyond potential political developments, investors will be watching for job figures. That's what we're talking about right now. Data released Thursday painted a mixed picture of the economy, with one report showing the number of workers filed for unemployment benefit last week fell to 837,000 from 873,000. That was less than the economists were expecting, but incredibly high compared with before the pandemic level. Airlines, other major companies announced layoffs and furloughs. Another round of economic aid from Congress is crucial. Stephen Mnuchin and House Speaker Pelosi, oh, that Pelosi, man, oh man, have worked effectively together in the past, helping to drive through the previous economic rescue approved by Congress in March. But the country's deepened partisan divide has stymied progress with the presidential election only about a month away. And let's see if the economic data, if the percentage figure has been filled in. Let's take a look. Let's see. It spins. 7.9%. Well, still in that range. So the number is getting slightly better, but again, consensus 8.2, we're slightly better, but still within the consensus range. I'd like to see this number like at 6, at 5, not at 7.9. And private payroll, 877,000. Again, nothing really that great. Today, I want you to keep an eye on the bond market. If the stock market starts pulling down further, we may see a rally in the bond market. As far as the overall stock market, if you look at the SPY, we're going to open up below the 50-day moving average. Remember what I tell you, never trade. Just because the market's above the 50-day moving average doesn't mean you should go long. You want to wait for 2 complete days of clearance. Do you see complete days of clearance here? No. Look at this. It touched the low. The low touched the blue. That's the band. Here, the low or even the mid touched the blue. Here, we were lower, so there's nothing even to talk about. And again, we're going to open right here below, back in the twilight zone. Looking at the QQQ, we did have 2 complete days clearance, and we're still above the 50-day moving average. Now, there's a good chance we may open and rally from here on. But if I was in one of the 2 indices, I would prefer to be in the NASDAQ right now versus the S&P, because the NASDAQ is trading above the 50-day moving average, even pre-open, while the SPY is trading well below in the twilight zone again. And if we break this level and we continue going lower and it looks like we're going to hit the 200-day, you will see a spike in the bond market, or at least you'll see the bond market start heading above the 50-day moving average. The fact that the bond market has been so congested and sideways over the past month tells me that markets are looking for a vaccine for the COVID-19 at the end of the trade war, and now they're looking to see what will happen with President Trump. Now, it's Friday. I'm still very bearish, but today I've got a good short for you. This is a 4x4 pullback. We wait for a market to make a 40-day low, and then we wait for 3 days to pull up, and the 4th day to start coming down again. Now, I like this because the price action is well below the 50-day moving average, most importantly, and the 200-day moving average. Most importantly, one of the reasons I like it is because it's setting up for a nice pullback down again after 3 high days. So you're buying at a pretty good discount, relatively speaking. You're selling at a pretty good discount, relatively speaking. It closed in the low, and it looks like it's going to open lower. And here's what I like about it. I like the fact that the highs, the swing highs, were very brief above the 200-day line, and then the stock went right back down. Also, I like the fact that the highs have been going lower and not higher, which means the stock, even on its best day, doesn't have enough strength to trade higher, make higher highs. The profile of the stock, as you will see here, it's a technology-enabled service platform that consumers, healthcare savings, and spending decisions, whatever they're doing, they're not doing really well. I mean, they haven't been doing the 1-year return, negative 7%, 3-year return. I mean, it looked like it was doing really well for a while back, a few years ago, but recently it hasn't. Earnings per share growth, previous quarter this year, they don't look really, really good. And if we look at the earnings estimates, let's do that, you'll see here that surprises have been positive, but estimates are lower. Earning estimates are a huge factor, a huge factor. The price of the stock right now is at $51. Look at the low estimate, 34, and I think we're going to get there. And look at this. It's been just going weaker and weaker and weaker. And the trend looks like it's getting lower. And that's telling me the stock will probably go lower. Again, you're buying it on a pullback. Now, a pullback to the upside. You're selling it on a pullback to the upside. You want to sell short right around the 51.20 level. And if it breaks above 54, you're out. So you're selling short on a sell stop. You're placing a sell stop below this level, right at the 51.25 level, I would say. 51.28, 51.10 level, a little bit below this price here, right where my mouse is right now. 51.16, 50, a little bit below the low. And then you're putting a buy stop, protecting buy stop after you're filled right above the 50-day moving average at the 54.03, 54.05 level. So you're going to go short right around the 51.10, and you're going to liquidate the position if it goes up above 54. And you could take a profit if it goes below the $45 level. I think it's going to go lower there. And again, notice the trend is getting weaker. It makes a high, comes down. Makes a lower high, comes down. And now it's making a high again. But it went to the 50-day line. It couldn't touch the 50-day line. It couldn't even get up to the 200-day op for obvious reasons. Then after huffing and puffing, it closed in the bottom 20th percent of its trading range after rallying 3 days after making a new 40-day low. This is called the 4x4 strategy. 40-day low, 4-day high, 40, 40. And then it works the same way on the upside. You would wait for an upswing and then for 3 down days and then an up day. But in this case, the trend is down. We're trading lower. This is a weak stock, so we only want to look at it on the way down. Again, ticker symbol is HQY. It's a 4x4 bearish pattern. You enter on a sell stop to go short. You enter on a sell stop below 50, slightly above 51, and you liquidate slightly above 54. And you would take your profits right around the $45, $44 level. Now, I've got something important for you. Don't go anywhere. What if I told you there's a way to know exactly when a stock will explode higher? Wouldn't that be something? Before it explodes higher. And that's the next opportunity to see a 300% gain. It's just around the corner. Imagine $1,000 turns into $4,000. $5,000 turns into $20,000. That's the power of a 300% gain or a triple-digit gain. How, you might ask, right? You want to know, don't you? Well, I'm glad you asked. There's a secret stock calendar that's predicted dozens of gains over the past decade. That's right, with nearly 100% certainty. It doesn't give a rip about the news, the earnings, the Fed, or what anyone else is saying. The stock simply explodes on the same day, year after year after year. Man, I love this. This is really cool. And the accuracy is like 4 out of 5 winners every time. When you know these dates, you can bank big profits. Imagine 300% returns on the same day every single year, like clockwork. And you know about the trades well in advance, like up to 7 days in advance. It's ridiculously simple, it's very effective, and it's super profitable. Are you ready to learn about this? Click on the link below. Take advantage of this info now. Who doesn't want triple and quadruple digit gains that are literally sitting on a calendar ready to be had? And attend this. You're going to learn some dates for, I think, 10 big stocks. So you're going to get 10 free picks here. Don't miss out. Follow the link below. Learn all about this. This is eye-opening. And have a great weekend. Bye, guys. I'll talk to you soon. Take care.